Testing, testing, testing. JB here. Hope everyone's doing outstanding. September 29th, 2023. Last day of the third quarter and last day of the month. Interesting session so far. We had the PCE numbers before the open, came in pretty much in line with expectations. Market rallied on the news, gapped higher, and now we have a reversal here. The S&P is now trading at lows at the downside here, 427.63 in the SPY. Small caps have reversed earlier gains, now down almost 0.4%. And we'll have to see how the close goes. Goldman Sachs came out with a piece after the close yesterday saying today's quarterly option expiration is the largest they've ever seen in terms of notional value of the amount of puts. So in essence, what it means is there's so many puts out there that are expiring today that if they start to go in the money, they might have to be exercised and covered, something to that effect, which could accelerate more downside. Who knows? Everybody has their little narrative they like to paint for these option expiration days and the quad witching and all that, and to rationalize some of these moves. But I mean, certainly an environment where the market seems less resistance to the downside than upside. It seems like that's where it's almost like an anchor on the market right now. We'll have to see how this all plays out. Obviously, didn't look that good yesterday. Market bouncing really on no news to speak of. And then this morning, it was gapping higher already, and then we had the PCE data, which kind of just, I guess, was more of a relief, saying, folks thinking that thankfully it's not any worse or it doesn't show any signs of heating or inflation ticking up a bit. Otherwise, the Fed will start saying higher for much longer as opposed to just higher for longer in regards to rates, things like that. So first, I'll talk about gold, and if you've been in this chat room for many years, I think I wrote a piece back in 2014, and I've did this rant a couple days ago. I do it every so often when I'm in gold positions, but I'm just not someone who's a gold bug or a gold bull. I tend to play for downside of gold just because I think at some point, not saying it's going to not exist, but I think as a form of store of value, it's just not going to be as prevalent as it used to be in the past, right? Everybody always talks about the gold standard and how the U.S. dollar should go back to the gold standard and things like that. But I just think the future doesn't have currencies being backed by commodities. I don't think that's the way things are going to go. And then you can see that by the rise in cryptocurrency. People don't want currencies tied to different asset classes, things like that. And right now, the U.S. dollar is only, and all these currencies that aren't backed by any kind of physical commodity are backed by the government. The odds of the government defaulting on its debt, the strength of its economy, things like that. So I think that's how things are going to stay for now. And who knows if the future is all these governments starting to come out with crypto dollars for their transactions, for their currency for the country, as opposed to regular dollar bills or whatever, the yen, however you want to call it. So in that aspect, I just think there's always an opportunity to play gold for downside, despite what you might hear from someone like Peter Schiff. Peter Schiff, I try not to talk bad about people, but to me, it's very hard to, and the only reason I really came upon him is, I think it was like 2010, he goes on CNBC and says gold's going to like 10,000. He's using the fear, because at the time, 2008, 2009, just pretty much had happened, scarred a lot of people who traded markets, and all it takes is a little nudged by somebody to get back in fear mode. And he took, in my opinion, you take advantage of that fear and say, wow, here's the best asset to hold during times of fear is gold. And he was saying it was going to 10,000. People on CNBC, went back when I used to watch it, were arguing with him. Sure enough, gold stayed at $1,000, and pretty much, I mean, it did go up to $2,000 this year. But if you take a look at other, equities, things like that, have way outperformed gold. And gold's not supposed to really outperform everything. It's just supposed to be something to hold in days of bad times and volatility, where at least some of your equity is protected. But so I came upon him then, and then he continues to just have this bull case and be negative. If the Fed is hawkish, he's negative. He says that's bullish for gold, that's negative for the economy. If the Fed is dovish, that's bullish gold, negative. That's bullish gold, bad for everything else because the Fed's going to print money. Whatever it is, however they spin it, it's always about the Fed. And regardless what the Fed, if it's either raising rates or cutting rates, it's good for gold. But of course, what does he do? His site is called Shift Gold. He sells gold to people. So of course, how can you have a unbiased view on gold when your site is buy gold from me? gold's going higher. With gold at historical highs, buy more gold. And do you think he makes money when gold goes down? Of course he doesn't. So that doesn't mean that's why I have a negative view on gold. I just, I see a lot of these people who are extremely bullish, and maybe it does go to 10,000 at some point. Yeah, I don't know. I was saying that on the rant the other day. The other thing that people have been talking about for the last couple of years, and Musk, I think, brought up the topic, is meteors. They all have gold. So this thought that you have a finite resource, that kind of takes away that argument. So things down the road. So needless to say, you saw it break this week. I think it's down over 3%. Let me see what it is now. Once it started breaking that 1900 handle, I thought an opportunity here, and I have long-term annotations on my gold chart. I think from back from like 2007 on my stock charts annotations, which I can put on the chat room right now. And you start looking. To me, charts are pretty much they're a historical demand, supply, demand. That's what a chart is. It's all about supply and demand, right? But when there's a point where the candle hits a point and it stops and it goes down, that means demand has waned and supply is starting to come online, right? There's more sellers than buyers. And on the flip side, when you see a candle stop at the bottom and then reverse, there's more buyers than sellers. Let's see if I can pull back the gold here. But gold's down. I got to get my chart up here. Sorry, folks. Oh, there it is. Yeah, so gold's down 3.4%. I don't have the month to the current with today's action. But I mean, it's certainly setting up for a move to at least, I put on the watch list, I think it's going to 1850, but here it is at 1867 this morning. The fact it ran all the way up to 1895 in the morning in reverse course, nearly $30 right now. I just think it's going to continue to fade to the downside. So I went and I locked the rest of my, October strikes for next week for 100%, and I went and rolled into November's because you can see the volatility on gold right now, which typically doesn't move. Let's see, $30 into, what was that? That's a 2% swing in gold today. I can put it up, or maybe that's less than that. I can get my trusty handy dandy calculator here. But it typically doesn't have these wild swings, so I don't want to be in a position where it runs back up to 1895 and then I'm back in the red on my put position. So I'd rather lock those puts in for over 100%, and then I'll just hold the November's, because if gold breaks through that 1850, I think 1800 comes pretty quickly as well. So let's see, it was a $30 move off the highs by 1895. Oh, it's 1.5% swing from the highs. Not a crazy move, but typically you don't see that with gold. So that's kind of my thought process there. And then on the other side, and I talked about this on my rant on Wednesday, is the miners. So you get the double whammy. Unfortunately, you get the double whammy both ways. But if gold goes down and the market goes down, you see these miners. Miners are going to sell off because of the market, and miners are going to sell off even more because the gold price is going down. And on the flip side, of course, when the market rallies, miners go up. If gold goes up with the market, it's a double whammy on the other side. But right now we're getting a reversal here. So, I was looking at the dust calls today. I'll probably just stand pat just because it's similar to what gold has been doing. It's been volatile. J Dust was down at $7.77 this morning at the open. Up here at $8.31. That's a much bigger swing. Let's see if I can get my handy dandy calculator here. Excuse me, folks. I talk too fast and I run out of breath, and then you hear me. All right. So you're talking a 54-cent move. Yeah, so it's 6.5% swing on J Dust. So I think it's headed into the nines, if not higher, in the coming days, and then maybe in the coming weeks, I may look for some later strikes to play for a move over $10. The other ETF I usually play is Dust, and Dust is up here almost it's 1480. It was at 1480 on Wednesday. So, as much as I think these are going to go higher, I just don't want to be in a position where I'm too aggressive and then it reverses against me and then my position, becomes deep in the red. I don't want that. So I'll probably just hold what I have now on gold. But that's kind of my thought process there. Stronger US dollar. That used to be a huge catalyst for gold. Doesn't seem to be as much the case, but the dollar has been strengthening. And again, at the end of the day, if we have this high inflation or continue to have inflation that's above the Fed's mandate of 2%, we have a Fed that's still tightening on monetary policy, possibly inducing a recession at some point, but probably not. And that's really all bullish gold. And the fact that it continues to sell off means, in my opinion, that I think people are just, I said it on Wednesday, either rebalancing, so they have a portfolio that's required to have 10% weighting in gold or 5%, and because equities have dropped, they're um, reducing their exposure to gold so that they can make it up in the equity side. I don't know. Those are all just things that I look at. Who knows what that, what the real, you know, who knows what it is that can rationalize the move to the downside. I just think you take a look at the 1900 handle break. I think it's headed to 1800 bucks, 1850 at least, and possibly 1800 bucks in the coming weeks. If also it was only at 1800 back in April. I think it was April. I can pull it up. And November, yeah, 18. I think it was 1806. I think I talked about that last time, right? 18 open, high, low, close. Open, high, low, close. I think it was March, right? Open, high, low, close. 1810. So 1810, February 28th. And then you look back in November. I mean, October. If you look at where we are right now, pretty much a year ago was at 1600 bucks. So I'm not saying it goes down there, but what has changed between now and last year? I mean, obviously the Fed started tightening, things got a little crazy, but now that we're working ourselves out of this tightening cycle. All right, so enough rant on gold. Weight Watchers, this week I'm going to try and talk about or get another piece together around the market opportunity for WW, because I kind of gave a summary of why I think the WW is undervalued, has a huge market opportunity ahead of it. It's on the verge of a turnaround, great leadership, taking advantage of a GLP-1 solution that could probably treat many different ailments outside of weight loss, diabetes, possibly cardiovascular, possibly addiction, and at the same time being healthy, diet health, exercise, being a support system. So I think all those bode well for Weight Watchers. So I think this weekend or in the coming days, I'm going to try and put a piece together like the possible market opportunity, what it means if WW gets a certain cut of the pie, how many members would it take to get to a certain revenue margin and a possible 1-2 year price target. I think by January it's going to be over 20 bucks, if not higher, possibly 30 bucks. Of course, I have strikes in the 30s, so ideally I want to see it in the 20s November, December, as opposed to waiting until January. But I think especially as people start to catch on with this GLP-1, the supply comes back online. You already had the analyst Craig Hallam throwing the towel on their sell rating. I think many more analysts are going to come out and either upgrade the stock or raise their targets like Morgan Stanley and Goldman Spectacular have done. So that's it on WW. So Nike puts. So Nike broke under 94 again just a little bit ago. Well, actually, it broke under 95, then bounced all the way up to 95.60, now back on under 95 and sitting here flat at 95. So Nike reported a decent quarter. Some of the big growth with Nike recently has been international. Their international numbers were horrible. They showed small comps on the U.S. side, but it was more of similar to some of these other companies. It was like a relief quarter. But then you saw all the way up to 97 in the morning, sold off down to 96. And once it started to break down, I said, wow, this is a name that probably could go red to green. And if not red to green today, maybe some pressure next week, similar to what happened to, and I keep using Lulu and ULTA as names, but both of those companies had some great reports and sold off because I think the market is trying to price in consumer weakness, or at least a slowdown in consumer spending outside of the micro, outside of just a quarter of earnings or a quarter earnings for Nike or quarter earnings for ULTA or Lulu. And at some point, things will get reset and then the stocks will be a buy. The thing with Nike, it's already down quite a bit. So it was, let's see what I can, and I mean, all the stuff was down quite a bit. But Nike was 125 back in June. And then it was 110 in August. And then at the start of September, it was 102.50. You look at the chart, if you can't get over that 102.50, I think it sets up for move back under 90 next week. So I got those puts. I'm not sure if I'll add any more because it's not, any bounce. Maybe people start to fly into it. A lot of positive analyst commentary today, although a lot of those analysts who did reiterate buy or outperform ratings lowered their price targets. So it means they were wrong on the price targets and using these earnings as an opportunity to kind of reset expectations. But that's kind of the thought process, getting those Nike puts, inexpensive ones. But I think if it reverses, maybe it closes near lows here today, 90, 93, 94. I think it trades under 90 next week. So that was the thought process, getting those puts. Lulu ULTA, what else to say here? The Nike earnings, Spark Lulu, similar sector, right? Apparel, fitness apparel. all the way up to 390 in the morning. Has sold off a little bit down here at 380, 250 it hit. Now it's at 384. You also have that news with Peloton and Lulu. I just got an email from Peloton announcing the partnership where they're going to take on the Mirror platform customers. So they're going to provide digital content for the Mirror, it sounds like. They also offer a 10% coupon for buying Lulu apparel, which, again, I said it when it was announced after the close. I think it was Wednesday after the close, the partnership. I think it somewhat dilutes the Lululemon brand when you have, number one, it's already showing they're discounting it, right? And number two, it just, I think they do well without having that kind of partnership. But the thing is, Peloton had their own apparel line. Lulu thought it infringed on some of the patents with their bras or whatever the argument was. There was some back and forth. I think Peloton settled, but I think because of the discussions, they thought it a great fit to help drive the business on both sides. And then the fact that Lululemon bought the Mirror for, I think it was $1 billion at the time, and then that's a failing, or maybe it's 100. No, I think it was $1 billion, maybe it was $2 billion. And then if it failed, they've already wrote off or charged off some of the costs associated with it. So I think it's their smokescreen to get out of that Mirror side, so that it's not like one of those things where the next one morning they're issuing a press release and it's just about the Mirror, and it just shows an epic failure for Lulu. Uh, I guess it's smart PR on the PR side, but again, I just think the partnership with Peloton, I think it's bullish Peloton, negative for Lulu. But again, I'm looking at that through bear goggles. I'm biased to the downside, so of course I'm not going to look at the acquisition or the partnership and say, wow, this is bullish for Lulu. So that's kind of the thought process there. And then ULTA all the way up to 403. I think the trap door is at 402, 403 that I posted at the start of the week, or well, last week, and it broke through that on yeah, I think it was Monday, all the way down to three. I think it's 376. No, three. Yeah. Why do I? No. Why don't I have my Lulu chart up? Sorry. Yeah, it hit like 386, and then the last 3 days are in the green here, but right up to 400. I think some reversal. I locked in most of my puts already on ULTA. I think it heads back into the 380s. I might look to add some more strikes next week if there's weakness back to 390 or so. Um, yeah, I think that's it. Oh, interesting. Yeah, and just a little post if you're listening on audio that's recorded. So unknown blood and post in the chat room around Madrigal. So yeah, if you don't know, Blue Apron was acquired this morning, taken private for $13 a share. I wrote a bullish piece on it almost a year ago today. I think it was September 22nd. Um, Interesting story. Stock was destroyed. They blew up the COVID, during COVID stay at home situation, as made sense for people to sign up for their meal programs to get it sent to your house for four meals or whatever. Um, don't have to go to the supermarket. So they were able to take on a lot of folks, but then they had a lot of expense issues. If you ever tried any of these prepackaged meal programs, my wife has tried a lot of these, and Blue Apron had one of the most clumsiest shipping of ingredients of all of them. Not neat, not organized, not packaged right. But anyway, there was an opportunity. I think it was traded one times revenues. They had a huge stakeholder. It looked like they were turning the corner. Of course, that didn't all pan out. The stakeholder actually pulled out of his agreement to provide equity. The stock tumbled. After that, I took it off my radar. I think they did a reverse split as well. And then sure enough, what happens? They get acquired today. The same week that Intercept Pharmaceuticals gets acquired. One of those names I've traded over the years as well. So the good thing is I don't have to look at those two tickers anymore and be trying to find entries, or if I do get an entry, having to stare at them expiring worthless for a couple months. So that's a good thing, but they will be missed. But yeah, other names in the NASH space, MDGL is one of those that's going to get approved. It's going to be the first NASH solution approved by the FDA, and it's just a little too late. I think people are going to be looking at these GLP-1 drugs, and there was a study by, I think it was NVO, that showed it reduced NASH by taking the GLP-1 drug. So pretty much why would you take any other drug if GLP-1 is the solution? Solution for weight loss, diabetes, all those things. So we'll have to see how that plays out. It was, I was following MDGL a while because I used to follow Intercept, and they both were in the NASH space. And MDGL was down in the 70s, 80s, and I should have pulled the trigger. And then, sure enough, they got the approval. Great phase 3 data, FDA approval. Stock shoots up to like $300. But then, it's been getting destroyed because it's reality. You see all these other names, not only in the NASH space but medtech space, and pretty much every day or every week, there's a new article coming out with supposed impacts from GLP-1. And I think it was Easy Trader posted in the chat room around Lulu. Hey, more folks might be apt to wear yoga and athletic gear because of GLP-1 because they're in better shape, or whatever that might look like. Hey, I've seen people in athletic gear that probably shouldn't be wearing it anyway. I don't know if that's going to change, but hey, maybe that makes it bullish. I don't know. And here's Nike off the 94 handle. Once bounced through, it's 95.50 again. Let's see if it gets through there. Maybe it gets back up to 96. But I'm just going to hold into next week. I think that's it. What else would I have on here? Lulu. I was looking LLY. There's some names that LLY has been churning for so long, and I didn't even look today. I hope it's not. Okay, it's down here, 533. Whoa. Yeah, take a look at LLYs right at the bottom of the lower Bollinger Band. Right, sometimes when it's too easy of a trade, everybody piles in and then it sells off for no reason. This thing's probably gonna be $700, $800, $900 in the coming months, but quick $75 drop from the upper Bollinger Band. Now it's at the lower Bollinger Band. Maybe it's a nice bounce play into next week if the market finds footing. So definitely have an LLY on the watch list. Who else did I have this morning? I had someone else that I added on. Edit. Yeah, I was looking to add some calls on Edit, but Edit has done this countless times. You can see this candle today. It was rallying right in the morning. I was looking at some strikes, and thankfully I kind of sat on my hands all the way up to almost 860, and I think at that point it was up 20%, and now it's down here at 770. Maybe a name I'll revisit. If you don't know, Edit, they had some serious issues. Their chief medical officer got dismissed, terminated. They've never given a reason, but typically when you're a early stage drug company that has no product to the market yet, and your chief medical officer is not there anymore for unknown reasons, that is not a good thing for a drug company. But they finally replaced some of the leadership, got a new chief medical CMO, and now maybe it's the start of a nice move. They have some great partnerships. So at some point, maybe I'll revisit. $12 back in August. I think that's it. So we got middle of October is the start of earnings season. I think it's like October. I'll have to get the dates. I'll have them on the watch list. And then we get the Fed at the first week of November. So kind of the next big catalyst. But I think once we get to the earnings season, that might be the time to kind of dip in. Have to worry about the government shutdown this weekend. I think most of that's already baked in. It's been talked about. I just have this feeling they're going to stay over, get a deal over the weekend done, and then that'll be that. Whether the markets gap higher or not, they'll probably head higher overnight or in the morning. Where it goes from there, I don't know. It's just, for me, it's very hard to wrap my head around being extremely bullish here. Market's still up for the year. So just some repositioning. It's end of quarter. We're probably, October. This time frame that we just went through was historically the worst time frame of the entire year for markets. So you tie all those things together, and it's just a recipe for some weakness. So there's Nike through 95.60. There's 95.71. So we'll see. All right, folks, that's it. Have a great weekend. If I'm not on the audio, have a great day. Rock and roll. Testing.